Everybody, I was wrong about Unity. Welcome back to Strongman Personal Finance. I'm Christopher Bell, certified public accountant, long-term boglehead investor, author of the book Stop Being a Broke Loser, amazing t-shirt designer, it's in the link in the description below, and still a hater of Unity software stock. Now, I made two videos way back in the day where I made fun of the freaking degenerate clown and stock pumper and loser, George Perez or Lopez or whatever his name is, because he was pumping Unity software. And I believe Kathy Wood has this in her portfolio. So as a YouTuber, you just copy what Kathy buys and then you just pump it on your channel and then you're a genius. That's how it works. I think Unity software is not a buy. Now, a lot of you are making fun of me because the stock went up, bro. You see, over the last 3 months, it's up 60%. You could have missed such a great trade had you listened to me and bought this unprofitable company. Now, the earnings of Unity software are coming out today. It's pretty exciting. I'm really curious to see what Unity's earnings are. Probably going to be a loss, but who can tell? Now, Wall Street has Unity as a buy probably because the stock went up and it's the future, bro. And Kathy Wood invested in it. But basically, they develop video game software, provide software solutions to create, run, and monetize interactive real-time 2 and 3D content for mobile phones, blah, 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 blah. Now, a lot of you probably understand this company way better than I do, and that's fine. But there's one thing I do understand, and that's the numbers. So all you trolls and clowns commenting on my video, you were wrong. I'm a genius because George Perez Lopez, whatever his name is, and Kathy Wood bought it, and since they bought it, I bought it, and it went up. And the stock went up, and the stock goes up. That means it's a good buy. People are freaking losers. So here's some of the comments. Okay, well, some of these are trolls, but fact-based opinion. Keep holding that L, clown. I didn't lose any money. Fact-based opinion. You were dead wrong about Unity in the first video, and you're still wrong, chump. It's okay to be wrong, guy. And there's 4 clowns. Clown. Okay? Any other hate comments? What do you think about Tesla, bro? You're not too bright. Okay, so not many terrible comments, surprisingly. Now, I like to look at the fundamentals of a company. That's all I care about. I don't care about future and excitement and it's the future, bro, or whatever. I want to see the fundamentals. Is the company profitable? Is it heading towards profitability? Is it diluting the current shareholders? Is the valuation rich right now? So, if we go on Morningstar.com, which I got from free from my local library, you can actually look at the fundamentals, which I know it's boring. Oh my God. So it gives you kind of a snapshot on the front page, but I like going to the key ratios. Now here we're looking at the financials. So every quarter we have the income statement, revenue minus gross profit, blah, 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 blah. The income statement shows us the company's profit on the accrual basis of accounting. Now here's what I did not like about Unity software. Let's start all the way for the most recent 12 months, and then we'll look at each quarter. So over the last 12 months, they have generated $929 million of revenue. They've had cost of revenue, cost of goods sold of $217 with a gross profit of $713. That's actually extremely good from a gross profit perspective. It's a tech company, so it does deserve a higher multiple of sales if it's profitable than other companies. However, they seem to have a lot of operating expenses, which really eat away at their profits. The two biggest ones are research and development and selling, general, and administrative expenses. Now, a lot of you said, well, if they stopped doing R&D, then they would be profitable. And that's true, but they wouldn't be that profitable if they stopped doing research and development. So let's assume over the last 12 months, they did no R&D, which I'm sure they have to do to stay competitive. And they had $713 million in gross profit. Let's say they only have selling, general, and administrative expenses. So I'm just going to subtract those. That gives them a profit on the accrual basis of accounting of $62 million. You divide that by the $929 million, that's a gross or a net margin of 6.7%. That's not very profitable for a tech company, okay? I don't know what's going on with that selling, general, and administrative expenses, but they're pretty freaking high, okay? And that's excluding all research and development. I mean, are they going to stop all research and development? No, I don't think so. So their freaking margins are not that great. All right, let's see it for the most recent quarter. I mean, the earnings are coming out. I'm sure we'll be excited to see what that is. So they had a gross profit of $216, and they had selling general administrative expenses of $211. So that's a $5 million profit on $274 million of revenue. Wow, 1.8% net margin. That's incredible, okay? And that's before taxes. That's not even including taxes. They still have to pay taxes and interest. Okay, let's see. 176, I'm looking at the quarter ended March 2021, minus selling general administrative expenses. I'm completely excluding R&D. Divide that by 235. Okay, 18% margin. That quarter was a little bit better. But they're going to need to really tamper down on those selling general administrative expenses because they're so freaking high. And you have to assume they're not even going to do R&D in the future, which is completely fallacious. So the only good thing about this company that I'm seeing is, okay, revenue growth is decent and the gross profit's really good, but the actual selling expenses and the R&D are annihilating the profits. Look at the net income. Negative 27 million, negative 145 million, negative 84 million, negative 107 million, negative 148 million, and over the last 12 months, negative $484 million of loss. Earnings per share, negative, 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 and increasing. Weighted average shares outstanding, that's share dilution, increasing, 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 increasing. It's almost like they need to dilute the current shareholders to survive because they're not generating a profit. Let's go look at the statement of cash flows. So, on the statement of cash flows, you adjust the accrual basis accounting to the cash basis. Now, the key things you want to look at are net cash provided by operating activities. That's actually profits from operations. As you can see, little positive, little positive, little positive, negative, negative, negative. Ooh, man. That's so amazing. So basically, they're losing money even from their operations, not even factoring in like, buying property, plant, and equipment or, financing. Net cash used in investing, negative. Okay, so there's nothing wrong with using cash for investing, but you also want to look at free cash flow, which is, money you can actually use to pay a dividend, make acquisitions, pay down debt, buy down shares, stuff like that. Positive free cash flow is a must to really value a company easily, okay? Free cash flow, positive, positive. Okay, little positives. Look at the little positives and then negative, 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 negative. Come on. Why would you buy this? What is justifying this stock going up? Excitement, future, revenue growth. It's going to be profitable. Now, I'm going to dissect the earnings when they come out because they're coming out today. So I'll make another follow-up video tomorrow or maybe later tonight. But I'm really curious to see if this company's trending towards profitability, okay, you can consider it. But I don't want you coming on my channel talking trash. Okay, you little shills. Because George Perez, let's see what that little clown's up to. I always forget his name. George Lopez, George Perez. I really always confuse his name. George Lopez, or George Perez is a freaking idiot who has no idea what he's doing, okay? There he is. George Perez, 124,000 subscribers. He pumps a bunch of random freaking penny stocks, cryptocurrencies, and a bunch of unprofitable companies. ADA to 25x. Hasn't 25x. Neo to 300. Palantir. I mean, this guy's just a pumping loser. Why would you listen to this guy? It doesn't make sense. My name is George, and I quit my accounting job at Ernst & Young over 8 years ago, and I haven't worked a job since and never will. What are you living off? You're selling your butt? That is a job, buddy. Anyway, this guy's a clown, so you come make fun of me all you want. That's fine. I still think Unity's not a buy right now, and I'm not going to even consider it until it's profitable. That's it. Like, subscribe, tell your friends about me. Y'all have a wonderful day. Cheers.